We have learned several concepts under Ind AS 23, that is borrowing costs. We would now like to apply that learning of the concepts with the help of several questions and case study to test our knowledge. We are provided with the information. Vikrant Limited has placed an order for 4 ships with a shipbuilder on 1st April 2020. As per the contract, Vikrant Limited is required to make a down payment of 30% on each ship. The company makes the payment utilizing long-term borrowings from a bank. The vendor has agreed to start the delivery from the financial year 2027. The shipbuilder has communicated to Vikrant Limited that as on 1st of March 2022, the building activity on one ship has started with no progress on other 3 ships. This is an important statement for us. Vikrant Limited follows financial year for its regulatory reporting. The requirement of the question is, can Vikrant Limited capitalize any borrowing costs for the reporting period ending 31st of March 2021 or 31st of March 2022? Now, importantly, this is the requirement that we need to pick up. When do we capitalize any borrowing costs, right? We would remember here that there are 3 criteria that borrowing costs are being incurred. Expenditure on the asset is being incurred, and importantly, all these 3 conditions are important, and activities necessary to construct the asset are being undertaken or taking place, right? Now, we know that this capitalization is only relevant if the asset is a qualifying asset. And of course, in our example, when we refer to the ships, for that matter, they are necessarily an example of a qualifying asset. So they would meet the criteria, where the borrowing cost can be capitalized. But what we are also provided with the information is that out of the 4 ships, wherein you would have made the payments as a down payment, which means that this scenario is met, or this condition is met. It also mentions that you're utilizing long-term borrowings from the bank, which means also that this condition is met as well. But as the vendor confirmed that until 1st of March 2022, no progress has happened other than that of, or no progress has happened for any of the ships, and you have only started the activity on one ship, which means that up to this date, up to 1st of March 2022, this condition is not met anywhere at all. What does it mean? It means that up to this date, no borrowing costs can be capitalized. Okay, which means that for the year ended 31st of March 22, right? We cannot capitalize, or 31st of March, for the year ended 31st of March 2021, no borrowing cost can be capitalized. And as far as the year ended 31st of March 22 is concerned, only for one ship, and that too for 1 month, which is March 22, you can capitalize the borrowing costs, right? We go back to the information given here. We have provided that on 1st of March 2022 and up to 31st of March 2022 only, the borrowing cost can be capitalized with respect to that single ship for which the construction activities have started. Right? Let's have a look at the solution in a more formal, more structured manner. It says that as per Ind AS 23, an entity shall capitalize borrowing costs which are directly attributable for the creation of the qualifying asset. Okay. And a qualifying asset is an asset that necessarily takes a substantial period of time to get ready for its intended use or sale. Of course, the ships would be considered as a qualifying asset as per the criteria. Now, the second important point where we talk about when do you capitalize? We say that you start capitalizing borrowing costs when you are meeting these three conditions. It incurs expenditure for the assets, it incurs the borrowing costs, and the activities are being undertaken as well. Right? Now, of course, in the given scenario, up to 31st of March 2021, all the three conditions together are not met at all. And that is only happening in the next year, which means that no borrowing cost can be capitalized for the year ended 31st of March 2021. Right? In the year 31st, in the year ended 31st of March 2022, you can capitalize the borrowing cost for one ship, and that too for only 1 month. Rest all the borrowing costs should be simply charged to the profit and loss account. All right. Thank you. We are provided with the information here. It says that during the year ended 31st of March 2022, Kappa Limited has started working on a qualifying asset. Kappa Limited's funding requirement includes working capital, including working capital and overdraft, are managed by a separate team of professionals. That's okay. The following expenses are incurred on the asset. On the 1st of July 2021, 25 lakh rupees is spent, and on the 1st of December 2021, another 30 lakh is being spent. Information for various loans taken is provided below. There is a secured term loan at 10%, average balance is 1 CR, and interest is 10 lakh rupees. Working capital facility, average balance is 50 lakhs and interest is 6.5 lakh rupees. The question's requirement is determine the borrowing costs to be capitalized by Kappa Limited. Now, importantly, what you want to remember here is that this is not a specific borrowing, but general borrowings, right? We have a secured term loan and working capital facility. And the moment I hear the term general borrowings, I refer to the weighted average cost of capital or the weighted average cost of borrowings. Okay. And that is where we want to use this information that we are paying an interest of 10 lakhs and 6.5 lakhs, which makes a total of 16.5 lakhs. And we are using the facility of 1 crore and 50 lakhs, which makes it, of course, 1.5 crores, right? So what do I do now? I use this information where I say that my weighted average cost of borrowings will be 6.5 lakh rupees. I think that's what we have. 16.5 lakhs, just to clarify. 16.5 lakhs over a facility of 1.5 crores. That makes it 11%. So that is my weighted average cost of borrowing, okay, for these general borrowings. Now, I'm also provided that we have incurred these costs, which are 25 lakh rupees on July 1st, 2021, and 30 lakh rupees on December 1st, 2021, right? So we are looking at the borrowing cost to be capitalized. We use this 11% for these draws, which are 25 lakh rupees. Now, starting July until 31st of March 2022, which is our, of course, financial year end. So we're looking from July to March, which makes it 9 months, and then another 30 lakh rupees at 11%. Now we started on December 1st, which makes it, of course, 4 months in total. And that is where we'll be able to kind of find the numbers. Let's do those calculations quickly. Now the first calculation comes at 2,06,250. And the other calculation comes at 1,10,000 rupees, which means that the total of 3,16,250 rupees. The total of 3,16,250 rupees is the amount of the borrowing cost to be capitalized. Right? Let's have a look at the formal solution on this. We are provided with this information, calculation of capitalization rate, which is 11%. Interest would be capitalized at 3.16. That's a rounded off figure. So that's what we use for our calculations. All right. Thank you very much.